IIA-CIA-Part1 exam practice questions with explanations are available in the video for you to study. Which action best supports an internal auditor's compliance with the principle of due professional care? A. Performing audit tests until all potential frauds are discovered. B. Documenting all work performed and the reasoning behind key judgments. C. Conducting every engagement with complete independence from management. D. Repeating audit tests performed by the external auditor. The answer is B. Exercising due professional care requires internal auditors to plan, execute, and document their work thoroughly to support findings and conclusions. This standard ensures work is both defensible and consistent with the expectations of a prudent and competent auditor. It does not imply total elimination of risk or exhaustive testing but emphasizes professional judgment. Documentation demonstrates transparency and accountability, key tenets of the IIA standards. Maintaining complete records also supports external review and quality assurance evaluations. An internal auditor is offered free conference tickets by a supplier whose controls will soon be audited. What should the auditor do to remain ethical? A. Accept the tickets but disclose it later to the supervisor. B. Refuse the offer to avoid any appearance of bias. C. Accept only if the tickets are shared with colleagues. D. Delay the audit until after the conference. The answer is B. According to the IIA Code of Ethics, internal auditors must avoid conflicts of interest and situations that could impair or appear to impair objectivity. Accepting gifts or favors from parties under review creates perceived bias, even if no misconduct occurs. By refusing the offer, the auditor upholds professional integrity and independence. Ethical behavior protects both the auditor's credibility and the organization's reputation. Maintaining impartiality is central to ethical auditing practice. The internal audit activity's independence is best preserved when the Chief Audit Executive, CAE, reports administratively to the CEO and functionally to the board. B. Reports both administratively and functionally to the CFO. C. Submits audit results directly to senior management only. D. Obtains approval for all audit findings from management before release. The answer is A. Reporting functionally to the board and administratively to the CEO ensures organizational independence in line with IIA standards. This structure enables the CAE to carry out audit responsibilities without undue management influence. It also provides the board with assurance that audit results are objective and reliable. Administrative reporting handles day-to-day operations, while functional reporting ensures strategic oversight. Together, this balance preserves audit authority and impartiality. Which control would most effectively prevent fictitious vendor payments? A. Allowing department heads to approve their own expense reports. B. Requiring dual approval for all new vendor setups. C. Permitting blanket purchase orders for recurring expenses. D. Delegating vendor maintenance to the accounts payable clerk. The answer is B. Dual approval of vendor setups ensures independent verification before any payments occur, minimizing the risk of fraudulent vendors. Fraud schemes often exploit weaknesses in vendor creation processes. By requiring at least 2 levels of authorization, organizations reduce opportunities for collusion or manipulation. This practice aligns with COSO's principles of control activities and segregation of duties. Preventive controls like this are far more effective than detective measures after payments occur. Which statement best describes the collective proficiency requirement for an internal audit team? A. Every auditor must be able to perform all types of audits. B. The team must collectively possess all competencies required by the audit plan. C. The CAE should personally hold all necessary professional certifications. D. Auditors should rely on external consultants for specialized audits. The answer is B. The IIA standards require that the internal audit activity, as a group, possesses the collective skills and knowledge needed to fulfill its audit plan. Individual auditors may have different areas of expertise, but together they must cover all critical competencies. This allows for an efficient division of tasks and use of specialized knowledge where required. The CAE ensures any skill gaps are addressed through training or external resources. This standard maintains quality and compliance with professional practice expectations. An internal auditor suspects a conflict of interest because a colleague is auditing a department where their close relative works. What should the auditor recommend? A. Proceed with the audit but increase documentation. B. Notify the CAE to evaluate reassignment. C. Continue the audit and disclose the issue afterward. D. Allow the auditor to continue under close supervision. The answer is B. When a potential conflict of interest arises, the matter must be reported to the Chief Audit Executive for evaluation. The CAE can then decide whether reassignment is necessary to preserve objectivity. This process ensures compliance with the IIA's Code of Ethics and Standard 1120 on individual objectivity. Transparency and proactive management of conflicts protect audit credibility. Maintaining independence is vital for stakeholder confidence in audit conclusions. Which scenario best reflects a control weakness in procurement? A. All purchase orders require signatures from 2 authorized managers. B. Purchase requests are initiated and approved by the same department head. C. Vendor invoices are matched to purchase orders before payment. Desegregation of duties is maintained between purchasing and receiving. The answer is B. Allowing a single person to both initiate and approve purchase requests creates an opportunity for unauthorized or improper transactions. Effective control systems rely on segregation of duties to prevent and detect errors or fraud. Dual authorization ensures independent review and reduces self-approval risk. This weakness could lead to favoritism, conflicts of interest, or misuse of company funds. Strengthening approval hierarchy aligns with COSO's principles of control design. Which of the following audit techniques is most effective for evaluating the performance of anti-fraud controls? A. Conducting interviews with department managers. B. Reviewing control flowcharts. C. Testing the actual operation of key controls. D. Comparing policies with best practices. The answer is C. Control testing provides direct evidence about whether anti-fraud mechanisms are functioning as intended. Unlike interviews or documentation reviews, testing validates control performance in practice. It reveals deviations from design and uncovers implementation failures. This approach aligns with IIA standards emphasizing evidence-based assurance. Effective testing enhances confidence in the organization's fraud risk management framework. When should the internal audit activity claim conformance with the IIA standards? A. Only after an external quality assessment confirms full compliance. B. Whenever the internal audit activity performs annual self-assessments and addresses deficiencies. C. Immediately after the audit plan is approved by the board. D. Only when auditors hold the CIA certification. The answer is B. The IIA allows an internal audit activity to claim conformance if it performs periodic self-assessments and takes corrective actions for any identified gaps. Full external reviews are required at least every 5 years, but interim internal assessments demonstrate ongoing compliance. This ensures continuous improvement in quality and adherence to professional standards. It also reflects the internal audit activity's commitment to excellence and transparency. Reporting conformance before resolving deficiencies would mislead stakeholders. A company partners with a local distributor to manage operations in a politically unstable region. This approach best represents which risk response strategy? A. Avoidance. B. Sharing. C. Acceptance. D. Reduction. The answer is B. Partnering with another entity to manage operations in a risky region exemplifies risk sharing. This strategy distributes potential losses between parties, thereby reducing the organization's exposure. It is commonly used when entering volatile markets or joint ventures. Sharing differs from avoidance, which eliminates risk entirely, and reduction, which minimizes its impact. This approach aligns with ISO 31000 principles emphasizing collaborative risk management.